Hi, this is Jim McNees with Guaranteed Rate Mortgage, and number 4 in my series of video tutorials for the mortgage industry is don'ts during the application. Previous one was do's. These are don'ts. We talk about do's and don'ts with our applicants all the time. These are so important. Do not change jobs or go self-employed. Anytime someone goes from a salaried job to self-employed or commissioned or bonus, we need 2 years. So anybody that's self-employed receives commissions or bonuses, we have to go back 2 years and average out that income. So going from a W-2 salaried position to self-employed is a deal killer. So don't change jobs. If you're going to change jobs, do it well after the loan closes. So we don't want to see any job changes, anybody going self-employed, or major changes during the loan application, because we get you approved on the information we have initially, and we just can't handle changes midstream. That can turn into a loan denial. Don't open new lines of credit or have your credit pulled by anybody. Happens all the time. People go open a new line of credit, 0% interest to buy that washer and dryer, etc., etc., etc. That puts a change on the credit report, and just like your job, we approve loans based on the credit score and the current credit report. Any changes in those arenas can change the entire loan and again, potentially lead to a denial. Don't transfer large amounts of money in and out of accounts during the loan process, especially cash. We don't like to see large transfers because we have to do what's called sourcing of assets. So if $2,000 comes rolling in and it's gift money or cash or a birthday gift or something of that nature that's not a paycheck or sourceable, $2,000 would be a large birthday gift, but it could happen for a wedding gift. That's probably more applicable. We have to source that money, and if it's cash, it's hard to source, and it's not a good situation. So if you've got cash, hang on to it. Don't deposit it in the bank till after the transaction. So bottom line is, moving around lots of money is difficult because we have to source everything. So just keep the transfers to a minimum or at zero. Don't hide any financial information, divorce, child support, alimony, recent financial developments. Sometimes we have to divulge things that aren't comfortable about our financial situation or something that's happening, but we're going to find out. So just open up, tell us everything so that we know, and that's going to help us get the loan through the system and approved and final approved and you to the closing table. We find out things in the end that weren't disclosed. Underwriters don't like that. They don't like surprises. Don't co-sign for another loan. It's going to increase your debt. You co-sign for somebody on a loan, it's the same as having debt in your name only. It counts against you. Sometimes we can prove the other person is making those payments, but rule of thumb, don't co-sign. Don't go out and buy a car. A lot of people do that too. They want to go buy a car for their new garage. Approvals are based on debts when the application is taken. We really don't want to see job changes, income changes, credit report changes, anything like that. Be conservative, save your money, get through the process, close, and then get on with it. But during the loan app process, be conservative, pay attention to detail, and pay attention to these don'ts. Thank you very much. Have a great day.